For decades, investing followed the same rules. Go to college, get a job, save slowly, invest later. But Gen Z looked at that system and said, nope. Born into financial chaos, student debt, inflation, market crashes, and a global pandemic, Gen Z didn't inherit trust in the old financial playbook. Instead, they rewrote it, and surprisingly, it's working. Let's break down how Gen Z is investing differently and why Wall Street is paying attention. First, Gen Z started investing earlier than any generation before them. Many Gen Z investors begin in their late teens or early 20s. Not because they're rich, but because investing is now accessible. No minimum balances, no complicated paperwork, no gatekeepers. With just a smartphone, they can buy fractional shares, ETFs, or even automate investing with a few taps. Time became their biggest advantage. Starting early means compounding does more of the heavy lifting, even with small amounts. Second, Gen Z invests with transparency, not blind trust. Older generations often relied on financial advisors, banks, and institutions. Gen Z relies on data, community, and self-education. They question fees, they compare platforms, they research endlessly. If something doesn't make sense, they don't buy it. This skepticism protects them from many traditional financial traps. Third, Gen Z blends investing with personal values. This generation doesn't separate money from meaning. They care about sustainability. They care about ethics. They care about long-term impact. That's why ESG investing, clean energy stocks, and socially responsible funds resonate strongly with them. For Gen Z, returns matter, but so does alignment. Fourth, Gen Z understands risk differently. They grew up watching markets crash and recover. Instead of fearing volatility, they expect it. They're more comfortable with market swings because they think long-term. Short-term losses don't scare them as much. They know wealth isn't built in weeks, it's built over decades. That mindset alone gives them a psychological edge. Fifth, Gen Z uses technology as a weapon. Automation, robo-advisors, AI tools, budgeting apps. They use everything. They automate investments. They track spending in real time. They optimize decisions with data. Emotion plays a smaller role because systems handle consistency. And consistency beats intelligence in investing. But let's be honest, Gen Z isn't perfect. Some chase hype, some overtrade, some learn the hard way. But here's the key difference. They share mistakes publicly. They evolve strategies in real time. That adaptability is powerful. So why is this approach working? Because Gen Z combines three things previous generations rarely had at the same time: early access, unlimited information, and long time horizons. That combination is dangerous in a good way. They don't wait for permission to build wealth. They don't rely on outdated rules. And they don't panic easily. The financial system is changing because investors are changing. Gen Z isn't trying to get rich overnight. They're trying to build flexibility, freedom, and optionality. And that mindset may be the smartest investment of all. So the real question isn't whether Gen Z is investing differently. They are. The real question is, will the rest of the world catch up or be left behind? If you want more real finance insights without the noise, hit subscribe. And I'll see you in the next one.